When it comes to tech, though, we have seen some losses, but are we headed for an even larger correction ahead?
I think the answer is yes. First of all, thank you very much for having me. One of the things that we've been focused on has been the significant divergence between the performance of these big eight technology companies and the rest of the market over the balance this year. The stocks I'm talking about are, Apple, Microsoft, Amazon, et cetera. These eight stocks collectively account for 28% of the weight of the S&P 500. Now, the first half of the year has been terrific for the S&P. You're up about 20%. These eight stocks, these technology names collectively are up by 65% in the first 7 months of the year. How are the other 492 companies doing in the S&P 500? They're up about 7%. So we think there's a significant divergence that's been created from a valuation perspective. I'll just give you one example. NVIDIA is sort of the poster child of this imbalance. From the bottom of the market last October to where NVIDIA's peaked out, over the course of the last month or so, the stock has gone up by a multiple of 5 times. From a valuation perspective, they're trading at something like 40 times forward revenues and 130 times forward earnings. That, in our view, is excessive, and it's reminiscent of what the tech stocks did in that fourth quarter of 1999 as we were going into the Y2K calendar changeover. So we've been expecting that the technology stocks would have some profit taking, in this August, September, October timeframe. You've seen some sloppiness over the course of the last, couple of weeks or so. We think this continues over the next few weeks and next few months. And in the meantime, we think some of the value stocks and small cap stocks and international stocks are probably going to feel some love.
So Phil, you talk about profit taking. I mean, let's look at one of those names that we just had up on the screen there, Apple. We have seen some declines on the back of those headlines coming out of China. There's an argument to be made whether, the sell-off we saw over the last few days, although a bit of a bounce back today, how much of that is overdone? Are you concerned that a headline like that could really start to unravel some of this tech trade, or is this just an overreaction in a very jittery market?
Well, look, the reality is these stocks have done phenomenally well since the bottom of the market last October and the first, 7 months of this year. So given where we are in the calendar and given how excessive valuations are, investors are looking for, some justification to lock in profits. And certainly the news out of China with regard to Apple and the concerns about how well or how poorly this new product transition is going to go. I guess they've got a new phone they're going to announce on September 12th. Some investors saying, you know what? Let's take some chips off the table. Let's play with the house's money. And so that's a perfectly rational viewpoint for a lot of investors. Now, is this a phenomenon that just lasts for a couple of days? Our best guess is that this phenomenon could last for a couple of months. The August, September, October period historically is a choppy one. This is the sort of thing we see every year. The fundamental setup is very similar to what we've seen in the past. So we went into this period thinking cautiously about domestic large cap growth and technology in particular. We're underweight those categories. And this is the reason. We do think they'll pull back. Not that these are bad companies. Look, Apple's a phenomenal company. Softy and NVIDIA are phenomenal companies, but I'd love to get back in overweight a little later in the cycle at much cheaper prices.